Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we just had, I'm sorry, I'm late. You know, I kind of forgot it's a Thursday. I got to be here a little bit earlier than that, but we had initial jobless claims come through, 191,000 versus the expected 220. Hey, welcome back, Aaron. Hey, Paul. Let's see, was there anything else? No, it's just the initial jobless claims. What about the continuing jobless claims? 1.939 versus an expected 1.962 and the previous 1.96. So it does appear that some people found jobs, which, yeah, it does seem like that the market is getting better now that the government shutdown has ended. Let's come over here and check the charts. Well, can I skip ahead? Because I believe that the big thing this morning... Okay, well, it wasn't that huge, but the Japanese yen rising on reports that it's basically a done deal. The central bank will be raising interest rates at their next meeting, and the ruling party, the conservative party over, or whatever they call it in Japan, but it's a right-wing party, will deal with it. So we're seeing the Japanese yen move up, and as a result over here, well, you didn't see too big of a move in the treasuries, but the treasuries did move down a little bit, but kind of there was a little bit of risk off sentiment as well. Oh, that's interesting. You don't really see it all that much in the equity indexes. Although, do you notice when you're looking here in the equities that like every day is like down and then they recover it, down and then they recover it? So kind of curious. So there does still appear to be a cautious risk tone in the market, even though you're not really seeing it super strong in the charts. And we did get a decent sell-off breaching below Tuesday's lows in the treasuries off of the jobless claims, but it does seem like that they're stabilizing there. Okay, nothing too big in oil. Gold and silver, just kind of plodding along there. Copper, still pullback, but still looks very, very strong. Already looked at the Japanese yen and then Bitcoin. What about Bitcoin? Well, it hasn't done a whole lot since kind of recovering and stabilizing earlier this week. Still looks kind of, a little pressured over there in Bitcoin, though. I think holders are probably still feeling the pinch, right? All right, Aaron, I don't know if you remember. Oh, of course I do. I was wondering what risk reward you personally use and what you think is a good risk reward to use overall. Okay, so here's the thing, is that the typical retail trader approach to risk is, I want to make X ticks and I'm going to risk X ticks to get it. Now, if you go and you do a back test and you back test literally any setup, you have your entry conditions, and then your exit conditions are that it either hits your take profit or it hits your stop. And if you back test that, what you're going to find is that your take profit parameters basically completely control the profitability of that system. And that it will tend to converge on that break-even line that is where the probability is equal to 1 over 1 plus R. Okay. So when you have set stops and targets, what you are essentially doing is just leaving yourselves up to the volatility of the market. So basically what I'm saying is I would not recommend having set stops and targets. So what do I do instead? You want to have a stop that is really more of an emergency stop, something that should never be hit unless something crazy happens. Okay. And I'm getting out if the flows are just not what I expect. Okay. So I have an expectation about what's going to happen. This morning, I'm kind of looking for a risk off tone because of Central Bank of Japan raising rates, which might mean flight to safety over here in the Treasuries. So that's kind of what I'm on the lookout for is like some aggressive market buying orders. Although today would say I'm not too hopeful because volatility in the Treasuries is still really, really low. Okay. But that's what we're looking for. So if I get into a trade, I need to see that in the flows. I want to see aggressive market orders taking out those offers and the offers running away. If I don't see that, if I see cumulative delta decline for a bar or two, I'm just getting out right there. And so I'm only going to lose like 2 or 3 ticks off of it. And that can allow you to get a much better distribution. Because the thing is that if we're going back to a density function, a density function is like, okay, for every day, how much money do you make on the day? And then we plot a histogram of it, right? And it should be, this is 0, should be kind of like this, right? Okay, well, it's usually not like this. It tends to be like this. Okay. Because of the spread. So most days you're going to lose. That is if it was just random. Okay. If your strategy was perfectly random, then you would lose a little bit, right? And what a lot of people do is they will push all of these over to here by having a really skewed risk reward. So then you get, if we change the color here to like a deep red or something, you get something where, we have a really big skew here, but then sometimes you get really, really big losses. Okay. So this is a problem because it seems like you're making money and you're not. What we would really like, optimal, would be the opposite of that, where you make money most of the time, but every once in a while you really, 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 really make money, right? And so in order to do that, we've got to give ourselves room to make things run. And basically what we're doing is, I can't necessarily tell when it's going to run like that. There are some times when I can. So I'm going to catch some of those. But then there's other ones that, I just kind of have to leave it open. And so I want my stop to be wide enough to give it room to breathe, essentially. So I want my stops to be further out than just what the natural noise of the market is. Right now, if I were to look at it generally, I would say that I use a 1-to-1. So most of the time, my winners are equal to my losers, but then I catch enough winners that go much further than that I can pull a win rate of 45% and still have a R factor of 1.5 to 2. So those are kind of the parameters that I get. So that the probability would be between 45 and 55%, and the R factor to be between 1.5 and 2. And I don't do that by putting targets and setting it there. I'm letting the order flow do it. I'm letting the order flow tell me, okay, it's going the other way. So this is no longer a good trade. Another thing that I will do is I will look at cumulative delta and I will say, I think that this is a really big move. I should see 20 to 30,000 net change in cumulative delta. And then when it gets there and I see like a liquidity hole form, which is kind of like it starts to just range in a spot and go nowhere. That's when I tend to get out. Like right now, just as an example on this trade, let's move over here to this chart because we have cumulative delta on here a little bit more clearly. Okay. I might get short over in here and say, well, I think that the jobless claims data is going to be good. And so I want to see like a 10,000 contracts changed, right? Okay, so I wait for the news. Cool, it worked out. Now you're getting this little pocket right here, right? It's ranging around a single price. You kind of, and that is like the easiest place to get out. Ideally, you get out somewhere over here, but in this instance, maybe you wouldn't be able to catch that, right? Okay. That was, let me see. And like, as I'm thinking about it, well, let's hear, what's your comment? So correct me if I'm wrong. Basically, by seeing the flows, you are able to cut losers really quickly, but you can also catch big enough winners to just really be profitable. Yes. So, but that was kind of more like the practical application part of it. So let me backtrack a second. If I was going to run a strategy that was like purely technical, which I wouldn't recommend doing, but let's just say that it's a purely technical strategy and it's based off of whether we're above or below a moving average. Instead of saying when we're above the moving average, I'm going to get in and then I'm going to have a set stop and target. Instead, I would rather have an entry signal and an exit signal. Some exit signal that says, like the simplest one is just stop and reverse. I stay in it until I get the opposite signal, right? That's going to give you a more interesting distribution. Because if you just use set stops and targets, then your results are just going to reflect the volatility of the market. So isn't that kind of odd that the standard kind of like, I'm not going to say it's the recommended way of managing risk, but I would call it like the default. Like it's what most retail traders default to. The default mode of taking risks basically sets you up to never really have success. And that's why you will see so many retail traders switch over to taking really, really big risk for tiny profit, right? Because that is seemingly like the only way to make it work. Now, don't get me wrong. If we're like at an algorithmic trading firm or something like that, they're going to take that big skew. They're going to take that big skew because they have tons of money and they can handle a loss like that. Right? That skew kind of allows them to margin up, supercharge their profits, and they are confident that they can avoid the fat tail because they have lots of things to tell them the fat tail is coming and how to adjust to it. The issue that I see with most retail traders is they take this huge risk to reward, like huge risks to relatively small reward. And then when they get to that market where you lose like 5 times, 10 times in a row, which it will happen to you. I tell you what, man, every back test that I've ever done, I've found a losing streak in there of at least 7 to 10 or 7 to 10 losers in a row, which if you're taking like really skewed risk reward, you would think should never happen, right? But for some reason, it does. It's just like the market knows that strategy has been profitable. And so when it's like a really bender of a day, they just hit that signal over and over and over again to get the liquidity. It's really weird. That's something that like shouldn't happen in a purely random data set, right? But it'll happen. And what typically happens to the retail trader when that streak happens is they're not used to losing. They hardly ever lose. So when that time comes and you have to realize that, oh, hey, it's not working today, walk away. Just, for me, if it's not the day, hopefully, I lose 2 ticks on it and I'll walk away, right? But what'll happen, or what used to happen to me before, is I would just keep trading it over and over and over again and have like an absolutely terrible week, right? So that's how I approach it. Okay. Uzi says, check the DM that I sent you. Oh yeah. that was really weird. YouTube told Uzi that he is the top 0.1% of viewers. You watched 336 of their videos this year. That's dedication. I can't believe that I have 336 videos this year, though. Like, there should only be 250 from live streams, and I've only put out like 3 full videos. So where is it getting those numbers from? Oh, maybe it includes shorts. I haven't made that many shorts, have I? Huh. I don't know. Maybe that is something I should try. I don't know if I found when I was working the contract job that it was really hard to make TikToks and stuff. I'd have to do it when I get home, and then I just don't want to do it or think about it, but I probably can do it. And I think a major factor there as well was just that my videos don't do well on TikTok anymore. It's like something happened. They changed the algorithm and it just doesn't like me. And it has now come to the decision that it doesn't like me. And so it's like, it's harder to break out of jail or something, Maybe though the TikTok audience changed. I find myself, do you see this in yourselves? You tell me if you see this in yourselves. Like, what I want to watch when I'm on TikTok has changed. Like, I don't want to do like serious work. Like every once in a while, Delta trend trading will come up and there'd be something that's like, oh, hey, I could do some work off of that, right? But I don't want to watch that TikTok right then. I want the entertainment, and I'm not going to watch something serious until I'm sitting at my computer and can write notes and test things and stuff, or like write serious comments. And so I'm wondering if maybe TikTok has just become too vapid, that like they changed it to optimize towards selling you stuff on the TikTok shop, and as a result, trading content doesn't do as well or something. Yeah. Well, I watch every trading stream, or at least most of them, and no other channel I watch makes content like that. If you watch this channel routinely with your trading, it'll probably be the same for any of the regulars here, because ain't no one else making a video every day. I know, right? I am just really shocked that it was 336. It's so big. I don't want to feel like I'm complaining, because the channel is up to 18,000 subscribers. I remember seeing many people where there were like comparable channels and they had recent success, and so they were up to 20,000 subscribers, and I was always really impressed. And then they would have something and their channel would just take off, sort of a thing, So like we're in the area where I always kind of wanted to be. I watch a ton of body cam videos, but they're spread across dozens of channels, so none of those channels will have high watch volume. Wait, what do you mean by body cam videos? Just you mean like, oh, police body cam? That's funny. That's good stuff. Hey, Paul too. So one of the things that I've been thinking about is I feel like that my content creation journey has kind of been backwards from maybe what's ideal. Because when I see people that really specialize in helping content creators, like, really get organized and do well and blow up, they always talk about first thing you got to do is pick an audience. You have this specific audience of people, and what do they want? What can you provide for them? So when I think of that, I think like, oh, okay, so maybe your audience is 21 to 30-year-old females. You know, what do they want? They want to see the guy with his shirt off. I don't know. Whatever it is. Okay. But you kind of take that approach, right? Versus what happened to me was I was just doing my thing and it kind of took off. And so we're trying to work with that. Okay, we have trading content. What can we make that is trading content wise, that is valuable to the existing subscribers, and we'll bring in new subscribers. You know, it's kind of backwards. And so I'm often thinking, okay, well, what actually is my audience then? And I don't think that my audience is really anybody that wants to day trade. That's maybe too small of a niche in the long run. Want it to be bigger than that. I think it would be anybody that wants to understand what's going on in markets and why markets behave the way that they do, which I think is a much broader group of people. Like the big thing, especially among Gen Z, but among millennials too, is it's hard to get into a house. Well, understanding what the market's doing is going to help you get into a house big time, right? So really my demographic is really like 25 to 40-year-old men is really like my key demographic, because a lot of the people that want to watch trading content right now, they are much younger than that. And I don't think that they'll be interested in my content, and I don't think that they'll really be able to take advantage of it either. They, you know, at that point, you're too young. You don't usually have the money to take on risk from day trading, you know? So that's kind of like, maybe that's my audience. Okay, so what does that audience actually like and want and need? Well, police body cam footage really sounds like that, like perfect there. Two of you guys watch that like that. That makes sense to me. I would be interested in watching. I don't think I would spend too much time, but if a police body cam video showed up on my For You page, I would probably watch it, right? Like, man, I was hoping my voice had gotten better today, but it's still a little off. I think I wanted to have my next video out on the 8th, which is also when my first day at the new job is going to be. But now I'm thinking, no, it's not going to be the 8th. So then I think, like, should I just push it off to the 15th? Or should I push it off to January? Maybe I'll push it off to January now. I think that it's a good, like, change in content. I don't know if it's, like, going to really move the needle, but, like, it really changed the way that I did that video. So I'm really interested to see how it does. While I'm thinking about it, hit that like button, by the way. Because I do think that helps. We need to do our experiment a little bit more dedicated, right? Every day, if we get everybody that comes in here, you know, those of you that are really, you know, like, it tells me that I'll get like between 75 and 200 unique viewers every day or something like that. But I don't actually think it's that high. I think it's like 2 dozen. You know, I think it's like the same 2 dozen people. By the way, that's a pretty big iceberg going off at 28. So is that the trade that I was looking for? I'm going to say yes, but I don't like that it's an iceberg. So I think that I have to hold off. And our first kind of line in the sand, if you will, is like right there too. So I don't like that. Oh, okay, yeah. So that actually is the overnight first deviation down. So we could totally come back to unchanged at 02. Okay. Well, if they fill me on the backwash, I can maybe be okay with that. Really, YouTube view is right at or less than 5 seconds. You know how YouTube plays videos as you hover over them? If you do that for 2 seconds or so, it will go into your history and count as a view. Yeah. I did, but spamming. Well, you don't need to spam the heart. I mean, that is fun too. I don't know if YouTube does anything with that, but I'm just saying the like button. Like when I come over here onto my thing, oh, actually, does it not show it anymore? Oh, it doesn't show me. It shows me concurrent viewers 9. So I do think, because there was this other thing, I don't know if, like a bunch of major YouTube channels were talking about how a lot of their viewer metrics changed. Linus Tech Tips in particular, and they did like a big deep dive on like what actually changed and why it happened and everything. And I do think that I see it here on the stream too, because we would almost always be at like 15 to 20 viewers, and lately it's more like 10 or 12. So some of those numbers have changed a little bit. I thought there was a spot here on my dashboard, though, that showed me how many likes the video had. And I'm not seeing that. Just see concurrent viewers, chat rate, views, not likes. But I'm pretty sure that there are... Oh, no, wait, here it is. I just need to scroll down on this. I have 2 likes on the video. So I think if we get to the end of the day here and we have a dozen likes, that's like what we used to do before before the whole GameStop fiasco, right? You know, it is really interesting. Okay, so that worked a little bit too well. I kind of wonder if I shouldn't have taken that second contract off there, but I am kind of just dipping my toes in, so I don't think I should feel, you know, like I'm pushing it too hard. Likes are the worst about updating, especially on the viewer side. If you see a chat and someone says there's only like 5 likes, but you see 50, gotta refresh your page. Oh yeah, no, totally, dude. The way that like a video that's like taking off and what you'll get changed. But not only that, but I think that YouTube like injects noise to it too. Like the number of likes that you have or the number of views that you have is like they give you like the actual number plus or minus a random number so that robots can't tell if they've been shadow banned or not. Okay, so we got really good action kind of in line with what I wanted to see. They're on the break, but it is normalizing really quickly here. So I'm thinking about what are the chances that they push back down. They definitely did that a bit yesterday, didn't they? Let's go back and look at yesterday. Well, okay, so yesterday it was a down and back up. Felt like that there was a day that went back and forth a ton, though. Well, there was this whole thing. So I think we're unlikely to be stuck in something like that, but it would be really frustrating if we were. Yeah, I don't know if that logic involves creator side at all. Yeah, you know, and the thing again is like what do we really want, and what is really practical, you know? I think at the end of it, the thing that I think would be like the biggest thing and that I want the most is for us to complete our own trading platform. To have our own trading platform. I think that I would probably still continue to use NinjaTrader and Jigsaw alongside it, but I want to have my own platform that is collecting data and doing some of these things so that at some point we can do machine learning and things like that. And we're getting close. Like I've got a lot of the, like at least we're getting close to something that like you can actually do something with. Need to start integrating data to it. And I think we're going to just kind of wait and take another shot at DX feed. I really, because DX feed is really like right now the best for like getting order flow on stocks. So I do think I want that, and I want to integrate it into it. And I don't know what we do, but that's probably the biggest thing, right? And that means that I'm going to have to do like, you know, programming in the evening, things like that. So one of the big, this is so dumb. Okay. One of the big impediments to me over the past, like, let's say 2 weeks, cause I worked really hard on the GUI and I got it to one spot and then was kind of like, okay, where do we go from here? And I've kind of been focused on a couple of other things. I haven't worked on it this week. And I don't think I'm going to work on it today either. I found out that I had forgotten to get the emissions and inspections on my car. So I went to get my car inspected yesterday, and they didn't have the stupid stickers. So now I have to go to the DMV. So that's probably my task today. But, oh, you know what? I do think... we'll just try this. Anyways, but one of the big impediments that I get from like doing anything in the evening is that my boys just want to play Minecraft all day, every day. If I try to get them into something else, you know, they'll play it and they think it's cool and they're obsessed with it for like a day, and then they just revert back to they want to play Minecraft. And to play Minecraft, probably going to use my computer is one of them. The computer doesn't turn off, the phone eventually does, and it's a lot easier to play Minecraft on the computer. So I would really like to build a mini PC just for them to play Minecraft. But oh my gosh, RAM is so expensive right now. It's crazy. You know what? I think it's going to get worse. I think it's going to get worse before it gets better, the RAM situation. Because I was seeing from people this morning that Crucial, which is one of the big three RAM makers, like basically there's 3 companies that make RAM and everybody else is just kind of licensing off of them. Crucial is not going to sell consumer memory anymore because they're basically going to gear it all towards data center. So yeah, the RAM shortage, I think it's going to get worse. €200, 32 gigs for, yeah. I mean, I guess $200 for 32 gigs isn't the end of the world. But like, if I want just a Minecraft PC, I probably want 16 gigs of RAM. Remember when it was like, it's kind of funny that 32 is the default now. Because I remember not that long ago, everybody's saying, oh, you don't need more than 16, and why would you have more than 16? And we'd be like, well, I have more than 16 because we need it. Because there are some backtesting use cases where we need it. So, whatever. I would like to get the new Steam box thing. that looks like that is like perfect. If that came out and it was like, I think they're targeting like, oh, 6. I forget what Linus Tech Tips had an estimate about what they think it was going to be. But if it was in that range, I think it could do it. But I think you can get Minecraft working on that, but it's not native to Steam, which is really annoying. Kind of made me realize, I bet you there are tons of Minecraft clones on Steam. but if I was Valve, Valve Software, because they are making games, right? I can't think, what's the games they're making right now? Oh, they are making a new Half-Life. I know that they are making a new Half-Life, or at least that's what the leaks suggest. But if Valve Software just went all in on like their own Minecraft clone, and it was really good, and it came with their new Steam machine, then they'd really be rolling it in. i7 14 gen with RTX 46. Yeah, that's not bad. 16 gigs for them is like a sandwich for 400-pound guy. Yeah. You know, it's kind of funny. I'm seeing a lot of people starting to complain about things like Firefox uses too much memory. People were complaining about Discord using too much memory. Apparently, the latest update in Discord kind of added some metrics collection for it to track how much memory you were using to try and track down memory leaks. So, like, it's a whole thing, man. It's weird. I tell you what, though, I think that there are a few things that could upset the gamers, like the exact people that you probably are trying to win over if you're trying to make AI a thing, right? I can't think of anything that would piss them off more than like killing PC gaming because nobody can get RAM. Yeah, I tell you what, it sure is clicking a lot here, but we're still at the back of the queue at 27.5 and are not getting fills. So, that's okay. We do have some signs of a liquidity hole at 28. So I'm not surprised about that, though, to be honest with you. All the browsers and things no longer care about efficiency. They all act like computers are so great they don't have to worry, but that in turn makes everything suck, I swear. Well, no, here's what happened, Abel. Here's my theory, at least. Here's my theory. My theory is that the advent of the web pushed all UI development into websites. And so now there is no native UI on anything. And that is why everything sucks. So that they would rather, if you're going to make an application, they would rather make it a web native application. Use like Electron or you know, any of the dozens of other like similar things where the application is not actually a native application. It's actually running a web browser engine under the surface that you don't even realize, and it's showing you all of the UI elements that way. And I think where it's hurting the most in particular is operating system development. Because, like, really think about it. The base Windows operating system, like kernel and everything, has gotten pretty solid. And performance-wise, I think works pretty well now. But the UI is just has not gotten better. It's not getting better. Getting worse in many respects. And whatever the next version of Windows that comes out is, I have zero confidence that the UI will be better. Right? And I'm telling you, it's because there is no actual development in UI. Like, if I want to make a native application, and I'm looking for, like, what UI frameworks can I use and things like that, you have essentially the same options that you did 10 years ago. There hasn't been really any new big players in that space to really like update and improve things. Now, there is one caveat to that, which is in the Linux world, there's a group of people doing something called System 76, I think it is, where they are building UI components using ICE, which is a UI framework in Rust, and they are building their desktop GUI off of that. So that might be the way forward. That really might be the way forward, but it's probably going to be like another decade before that's like mainstream, you know? Meanwhile, people are talking about like, well, maybe now is the time that people finally ditch Microsoft and everything just moves over to Linux. Honestly, like Linux becoming the mainstream operating system makes me a little nervous. Honestly. There's some cool things about Linux, but there are some things about the Linux ecosystem that are just like, ugh, so dumb. So dumb. Maybe Microsoft will make a Microsoft operating system on top of the Linux kernel, and well, there was a pretty big jump up there in cumulative delta to get up to 29. So you can kind of see it. It did it all at once, 6,000 contracts. Isn't that interesting? Now, at the same time, I am not... Oh, by the way, let's cancel these orders just in case. So if something, you know, happened and it came back, I wouldn't want it to, like, you know. And we'll also put the big stop, right? The stop that, like, should never get hit. But in this case, we kind of got in just into a liquidity hole, and they're maybe trying to dig it out. So I do kind of want to let it run here a little bit. I do think in cumulative delta we should be able to get the highs in cumulative delta, and I guess one spot I'm looking at is 113 even, because that's kind of the first. Oh, actually, no, that doesn't make sense. That should be the first deviation up. Yeah. Oh, that is cyan. Sometimes when I look at the chart and I see that cyan, it looks great to me for some reason. But it is cyan, so I don't know why I initially read it as gray. It looks like cyan to me. Oh, I can still keep one at 27.5, I suppose. But let's not have both of them, just if something like really crushed this down. Wouldn't want to get filled in that case, right? So Linux sounds better and better since I learned to code. Yeah. You know, like the thing about Linux though, Andre, is that it really is the kernel. The Linux kernel is an amazing piece of software. The rest of the Linux ecosystem, like it works and everything, but I'm not going to say that like the rest of the Linux ecosystem is awesome. You know, everywhere along the way, there's issues and weird things. And you know, there's this thing that I see a lot in tech, which is that you've kind of got to the point where certain things are the way that they are because that's just what was done, and now it's kind of been cemented. Just like the QWERTY keyboard is probably not the optimal keyboard layout, but nobody's going to learn something else, so we're probably stuck with it for the end of all time. right? There's a lot of that in Linux. And then when you do have a problem and you want to switch it in Linux, it's this whole big thing. Like going on the forums and read the arguments about systemd and init.d and changing those systems, because there are some distros where like their thing is that they switched over to newer versions of that, and my gosh, they're just like the biggest flame wars over the most like seemingly random technical issue. It's a big deal over there. I hate the keyboard thing. Don't even bring it up. I saw a video the other day from the Primogen that he was doing Dvorak, programmer's Dvorak, and he gave up on it. See that with the Oracle implementation in my workplace too. Ugh. So apparently one of the things that I am going to be doing is integrating with Oracle Cloud. So I will now have experience with all 4 major cloud platforms. And you know what? I do think, I think that some of the projections that they have and everything like that are a little crazy, and that maybe to some extent the Oracle stock was or is overvalued. But if there is value, I hate to use the word overvalued, but you get what I mean. But I do think that they are building a cloud that will get more popular. So, hey. But you're probably talking about like the Oracle database or something like that, huh? I remember when I worked for the bank, they used Oracle for like their HR stuff. So like, yeah, Andre says yes. So like when you're filling out your time cards and things like that, you're using Oracle. And my goodness, what a terrible interface. Like how do you have a company that's been around for that long and that many businesses use it for that reason and everything, and nobody has ever gone and made the interface for that thing better? What is with that? That's just so crazy to me. So crazy. Well, you know, we should be careful what we make popular, because, you know, we might be looking back 30 years from now and being like, you know, we're so dumb. Everybody used ChatGPT and we created this interface, and now like there would be so much better of a way to interact with AI, but we're stuck with what we got. Like, well, their CEO is champion at boat racing, so that what's his name? Is it that Ellison? Oh, Larry Ellison is the founder, but the co-CEOs now are Clay McGoyert and Mike Silica. I would like to. When you say boat racing, you mean like sailboat racing? Like when I think about rich people hobbies, you know, I don't think that I would want to do sports car racing, because, well, first of all, that's crazy expensive. But I guess if I was a billionaire, it shouldn't matter. But it's also dangerous too. Polo. Man, the whole thing with polo where you need like 12 horses or whatever and all this stuff. So crazy. I don't think I see myself playing polo. Tennis, that's a rich person hobby. But I feel like that's a more casual rich person hobby, you know? So I think that if I was going to have like my billionaire hobby, it would have to be sailboating. It'd have to be sailboating. It's too bad the Great Salt Lake is like drying up. There's not really anywhere to sail. Because otherwise it would have great sailing here. Right? Octavius, how's it been? Oh, I haven't seen you all week. What have you been up to? I understand. It's December. Well, we're having a good day today. I don't know. We haven't moved too far up yet, but like we recovered the action from the jobless claims, right? And then we had like a little bust up after that. But it has been more active, so you've been trading ES. Octavius, I can't believe it. What kind of setup have you been looking on ES? Because I really don't see how anybody finds an edge in that thing, man. I really don't. Like, not a, you know, let me take that back. I think that there are situations in ES where you can really, really clearly know where it's going to go and everybody be clueless about it. Like some of these situations, especially when like there's a really big gamma unclench or there's some macroeconomic development that's likely to happen and those sorts of things. So every once in a while, there is a situation where you can take a trade. It's probably better for swing trading. But where you can predict where the index is going to go really, really well. But not an edge that is like you're going to have potential to take a trade like every day. 0 day to expiration gap. Oh. You know, if you have the money, that probably is a good game, huh? Because there is so much interest in the 0 day to expiration options, and they almost all expire worthless. It's true. So there's probably some really great opportunities with Cam. It's just like, you really need to have a big account when you're doing that. You know? Like that's something that if a move goes wrong on you, you can easily lose hundreds of thousands. SPX volume is huge. Yeah. Gamma. Now that it is interesting though, because like there's so much speculation there in that, right? In the 0 day to expiration options. So you're really I guess what I'm asking is, how do you gain an edge in that? Right? Like you can say, well, most of them expire worthless, so I'm going to sell them. I'm going to make money most of the time. But it is fat-tailed. Like when it goes awry, it can really, really go awry. I would think that for the market makers that are doing that our edge is largely being able to price the option better than other people and things like that. So how are you actually building an edge, which is to say that you're able to pick prices or, you know, that better than other people? Better, greater in the after. Well, yeah, that makes sense too. It's always really interesting to watch. Every once in a while, Zero Hedge will post this on their synopsis of the day, where they'll show the index activity correlating really strongly with what people are doing in 0 day to expiration. And sometimes they'll like completely save the market. And more recently, it's like they're trying to buy the dip and it doesn't work. So It is interesting though, because if you look at like fade the gamma where the market makers will get crushed. So you're still looking at a mean reversion play. I don't know, man. So one of the things is that like to come in and trade and like just do the same thing for like 30 years and you're scalping and expect to have an edge that whole time is kind of unrealistic, right? Like the markets are going to shift and you have to shift with them. And a big part of that, a big part of how you build the edge as a retail trader is going where the opportunity is. You know, like there was a time when the opportunity was in electronic trading becoming more open to other people. And that's like Anthony Crudelli was probably one of the biggest beneficiaries of that shift, at least in the futures market, right? And then after that, more recently, it was like the explosion in options and the explosion in Bitcoin. And now the thing is 0 day to expiration options. It is. Okay. So if we're going off of that one though, here's my thought. Okay, I think that the next space to you know maybe build an advantage in that could become big like that and you could you know really benefit in that kind of way is market making in prediction markets. Market making prediction markets. Kalshi has done a lot of work to become like a real exchange. They haven't really taken over the prediction markets, but I think at some point they probably will. Well, Poly market is the big one. Poly market is, but that's a cryptocurrency market, right? No, I think that there's going to be really big stuff happening in regulated dollar-denominated prediction markets. Because Kalshi has had so much success in kind of dealing with the regulators. And the regulation scheme is kind of helpful to it as well. So eventually then. And maybe then at that point we can get prediction markets on things like President that are liquid enough that, you know, the market opinion on that is really tells us something. Because right now it's like one person can just skew the whole thing. Although watching the prediction market for who's going to be the next Federal Reserve Chairman has been interesting. It's a thing yesterday. Oh, I can't even remember the name of the guy that they want to put in. But the Financial Times kind of did their drive-by attack on him yesterday, and his percentage chance declined by like 5%. How are things for you? We've been okay. I took a small loser yesterday, but that was like the only major loss I've had in a while, and like we've more than made that back already on this one. This one is going okay. I probably shouldn't speak. It's probably gonna like completely collapse in on me. I do feel like that they seem to be having a hard time making headway here. Like you're not really getting, even though like look, they're ramping up the bid at 28.5, right? But you're not getting anybody nibbling at 29. And every time that it clicks, there's the big bid 3 away moves. Like that big one at 26.5. But I also totally understand going like, bond volatility is too low. Let's come back in January or when it comes higher. I also wonder sometimes if I should do more work on like intraday momentum setup sort of a thing. Like momentum is something that you see over long periods, but I could make a strategy that is specifically geared towards detecting when momentum funds are going to enter an asset and just scalping when they're entering and switching which instrument I'm trading every day based on that. Okay, so they traded down 2 ticks there. There was decent absorption on them. I'm going to cancel that I've been waiting for so long for, because I think there might be an opportunity to get an even better price if it did. Like I think if the trend is still up, I'm not going to get a fill at 27.5. And if I do get a fill at 27.5, it's probably going to go through me a little bit. So if it goes through me and I still believe in it, I would rather buy it lower rather than try and eat it right there. So I'm going to cancel that and kind of let it work its way out. We are getting back to that seller cost basis line at 27.5 as well, which I would really like my cost basis to be lower than that. I am seeing some big down move in oil. Ooh, and the SPOOs are taking a dive. Well, I did hear the news squawk talking there, but I didn't hear a major headline. It seemed like not really anything going on. You know, I wonder yesterday, the odds. So the odds for a rate cut in December are pretty much like 100%. But like the odds for a rate cut next year were starting to rise up from like 0 to like 30%. And I wonder if that's going to hold or not. What do you think of the bookmap / heat map? So bookmap as a platform is okay. I don't think that ultimately the most useful tool is the DOM, and their DOM is passable. Actually, I'd say it's better than most, but it's not as good as Jigsaw's DOM. But the heat map tool in particular is amazing, and you should use it. Just be really careful. Like, I feel like that the heat map really focuses your attention on where those big resting orders are. Like if I pull this up in the 10-year and show the Jigsaw equivalent, right? You're gonna be really focused on these areas like that, right? Oh, there's a big order there. There's a big order there. I want to do something when we get to those big orders. And I don't think that that's really a very good setup for a trade. So, you know, there are some things that you can pull out of it that are useful, but be really, really careful about a setup that's just based entirely on that there was liquidity sitting there for a really long time, you know? The information that I think is the most useful on the DOM is just watching it every tick. Like knowing that we came back 2 ticks, but that all of the limit orders stayed is, I think, significant. Seeing that you're not really seeing a lot of latent liquidity at 28.5, like every time that it passes up here, it's less than 1,000 contracts to go back and forth, right? How many orders it takes to clear 29, that's like a really useful piece of information to me. And you can't see that in the heat map. Okay, so there's useful things about the heat map, but just put it in perspective, you know. I think I got rid of my Like I had a thing that changed the colors of it so that they were green. I wish I still had that applied, but I feel like the interval here should be more like 10. Yeah, that looks a little better, and then make the width a little bit bigger so you can see them. Well, I don't know, maybe not. Maybe not. Maybe keep it at 1. Plus there's spoofing again in equities. Oh, really? That's interesting. Well, now another thing. Something that I can tell you that I watch and I've never really seen discussed by other people, but it's probably one of the best order flow market depth signals that I see. And that is, if you see a move, a trend begin, and as that trend moves, the liquidity on both sides, but especially behind it, gets stronger, that is a really, really strong sign of a strong trend. That's basically a sign that additional large meta order executioners have come in. That's like when Goldman and JP Morgan are doing really big operations, they will add liquidity to the market. They have found that adding liquidity to the market assists their execution. So they literally come in and the overall liquidity increases. This morning, pretty much everything is over 6,000, and then you got a bunch at 7,000. But it was always kind of like that. So, but you're maybe seeing a little bit of that today. Again, you can kind of see that in the heat map, but it's not something that people notice, whereas on the DOM, if you're watching the numbers, you notice it. So yeah, you mean when you see an increase in, no, just mean like the overall resting liquidity. So if you have a move up and the resting liquidity on both sides increases, like let's say that we broke 29.5. Okay, we broke 29.5, and then I come back and I look at it, and all of these, like right now, there's maybe one price that has 8,000 contracts on it sometimes, and everything else is 6,000 or 7,000, right? If we were to break 29.5 and like everything had 8,000 contracts on it at that point, I would probably cancel my target at 113 and try and let it run all day. So it's just like, as the trend becomes clear, you see the resting liquidity overall increase. This is a very, very strong indication of a strong trend that is likely to persist all day. By the way, I would have gotten filled at that 27.5 there, but oh, how come my thing here is not showing me how many contracts I have on? Well, okay. I was +1. I had canceled it, right? I would have gotten filled, but it wasn't like a huge, it's like a lot of the contracts canceled. So, kind of the sign I'm getting right now, and we've been in this for a while, is that there's not really a large meta order coming in that will push us up. I think that there's still a very, very good chance that we see 113 even, but at the moment, I'm kind of seeing more market maker shenanigans kind of stuff. Oil is really, really getting crushed. That kind of looks to me like the S&P 500 risk tone has fallen apart, which was kind of what I was expecting. But I'm not getting as much of a bid in treasuries as I was hoping. Is this only in treasuries or does it? You know, I have never seen it in ES or NQ. But in treasuries you see it, yeah. Again, in treasuries, I don't have a whole lot of evidence to tell me that like these things work really well in the equity indexes or not. But we know that they work really well in treasuries. How much on average do we make? Oh, hardly anything. Our trading's super, super small. We're making like $10, $20 at a time. If I do really, really well, like it pays for commissions and things like that. I'm not really doing it to become a millionaire or something like that. Probably could have done pretty well if I had sized up a bit and traded more. But that's not really the goal. Maybe someday we'll do that. But like, if your thinking here is, oh, I want to make a living off of this, how much does he make? That might give me a good idea of how much I can make from doing it. Just give up on that idea right now. Just give up on that idea right now. And I don't want people to believe me and trust me and follow me because they think that I made a lot of money. I want them to trust and follow me because I am presenting empirical evidence. Okay, because that's my biggest pet peeve is that everybody says, "Oh, I want to day trade. I'm going to go and find the person that has made the most money day trading and try and copy what they're doing," and that never works. You're basically it always leads you to the biggest huckster, the biggest charlatan in the space at that time. You never want to follow that person. So I do not base my authority on my past performance because past performance is not indicative of future results. Instead, we look at what the data actually says, what the peer-reviewed research actually says, and that's the stuff that I'm going to teach you. In addition to just kind of my own experience with how can you read the order flow better? You know, because that's kind of a little bit more of a intangible thing, you know. You only use DOM when trading. Well, so I would say that my edge comes primarily from informational edge. So I have an idea of what's going to happen before you ever see it on the DOM. Or a bigger way of saying it is like I am anti-pattern. I'm not looking for some market pattern or like setup, technical setup. Instead, like I know how the market behaves, and I will have a theory about somebody else is going to do something, and I make my moves based on that. Well, how bad is it going to get in ES? Because I think that they're still in an area where they could save it here and be okay. But how bad would it have to get? So let's say below 50. Below 50 it starts to get a little bit more hairy. 68.50. Now, I could pull up like all of my trading results. We actually did that earlier in the week, but I don't want to dive too deep into that right now just because I have a position on. Plus, there's nothing that interesting to watch in my most recent results because I haven't been trading a whole lot. Took 2 trades this week, which was higher than probably any week since October. So Now I am kind of thinking, because I don't like that it seems to be rotating back and forth at 27.5 a lot. And the flow really did not come in the way that I actually... So I'm thinking that I can scratch this. And if I really still believe in the upside, which I'm not sure that I do anymore, if I really still believe in the upside, that I can... Okay, so I got out. So let me show you why I'm saying that. So because I executed in Jigsaw, I won't draw the lines, but we got in somewhere around here-ish, right? And when you look at cumulative delta, so we had a good move there, we had a good move there, but more recently, it's not really going our way. And it's been much longer than 45 minutes as well. So I was expecting another leg to the meta order to push us up like that. And what I'm getting from the market right now is that that didn't happen. So if I can take one tick off of it, that's fine. Now, I think that there's still some opportunity for us in the next hour and 15 minutes before I get going that it could buy up. But I don't think that it would be a continuation of this move in a meta order and all that sort of stuff. It would probably be more likely a reaction to what's going on in other markets and stuff. Like maybe the treasuries would push up here if the S&P 500 really falls apart. But just because we were talking about it earlier, right? Like the delta's not going my way anymore. That's as good a reason as any to get out. And that I was, +1 and had at times +4 or 5, and I probably could have. Yeah, I was a little bit too stingy there. I probably could have made a tick on it bouncing up in there many, many times. This is what I should have been doing. So pretty good. It was an okay trade still. Especially when you consider that like volatility is 4.74. So like practically non-existent. That's actually a pretty good trade. But look, there they take 27, so I totally did the right thing. Why most Forex traders lose money and why algorithmic trading fixes what human trading can't. You know what? I bet you that if we did a survey and we looked at traders that trade discretionary versus traders that have automated robot trading, I would bet you that the percentage of people that have some success, like they've overall made money, compared to the number of people that even dabbled in it, even if they didn't take live trades, would be lower in algorithmic trading. Like, but I bet you that the algorithmic traders have lost less overall. Like at algorithmic trading, you do the back test, you find it doesn't work, you go and you look for something else, and people just go in that cycle forever and ever and ever until they get bored of it. That's what happens to most algorithmic traders. So, and the reason why that's important is because some people claim that like, oh yeah, like trading in these patterns, they all totally work. The problem is just that your emotions. No, it's not. See, algorithmic traders probably fail more often. Because they find that the strategy doesn't work. And the discretionary traders, they have the success just from stupid luck. So I was laughing because I was just going through my Discord messages, and somebody was messaging like, do you want advertising for your server? No. But they were like, listen, brother. What is I'm always weirded out when people on the internet call me brother. Like, I know where it comes from. Still weirds me out because that's not what we do in our culture. You're not all brothers? No. Well, okay, so in Utah, among Mormons, if you're at church and you're talking about somebody, you will call them brother so and so, brother Jones, brother Lee, whatever it is, right? But only like within that specific context, because it basically means another person of the congregation, right? In Islamic culture, like, you just call everybody brother, right? And so like, to have somebody when they want to talk business and they call me brother, I'm immediately like, oh, okay. Well, they're not from the US. That's really what it is. It's just, you're just telling me that you're not from the United States. Which wouldn't necessarily be a problem in and of itself, but like when it comes to Discord, the thing I hate is all these people going into other Discords and trying to advertise their Discord and stuff. I hate that. And it's mostly people outside of the US doing that. Do you? Oh, you know what, Mr. West Village? I totally forgot to do that. I was going to do that the other day, and I never did. I think I even downloaded it. I really should. I really should at this point. I don't think that there is anything that, like, yeah, I did Day Trader V6. There's not anything in the new version that like significantly benefits me, but I should still be using the most recent version of the platform. And I keep saying, well, I'll do it after the stream, and then I forget. We'll definitely do it this time. I'll install that, and then I'm going to run off to the DMV to get my car registered. Even though I think I'm going to buy a new car, I don't know. I'm torn on that one. So, I have an Acura. It's really old. It needs a new timing belt. So I'm kind of afraid of driving it because I'm afraid that the timing belt will break. So I'm going to be driving in an hour to work each day. Both ways, 2 hours total driving. Probably going to have to buy a new car. Like the Acura won't last that long with it. And so if I'm going to buy a new car in the next 2 years anyway, I probably should get one here in December, because you're going to probably get the best deal here in December, right? So I think I need to buy a new car. But then the question is, what do I keep the old car? And I think I do. I think that I probably wouldn't get anything for the trade-in value for it, and one of the kids can drive it. But the thing that kind of holds me back from that, well, in addition to I would need to do a few $1,000s of repairs on it, is that, like, there's no room in the driveway. I guess they could park on the street. But here, coming up on winter, you don't do that. You got the money and the room to keep your backup Super Saver 5000 vehicle or run the risk thinking newer actually means better. Yeah, like if I were to trade it in, I don't think I'd get even $1,600 for it. Which is really crazy to me because it is such a good car. It's been such a good car. Like the improvements in technology and stuff the cars have made since I got that one, it's like a 2009, but really weren't that worthwhile. It connects to your phone with Bluetooth to play audio, and that's all I really need. It's comfortable, leather, comfortable, and extremely reliable. You know, one of the things that's annoying to me about the car market now is that, like, the luxury car market's not really a thing anymore. Like the big feature that's luxury now is the car's performance. And I don't know if I actually care about that. You know, I don't want the base level because you do want like passing power, but I'm not gonna sports race with it. You know what? This actually, when I think about this, I ask myself, should I be concerned about this or not? Things that would be really cool to me before, that it's like, well, you know, it's not like a top priority, but if I had the money, it would be nice to do that. Well, it's not a top priority, but it would be nice to have a Porsche, right? And now I have like zero interest in any of those things. I think part of it is there are some things that I've kind of decided, well, because we have an autistic child, you know, like we wanted to spend more time at the shooting range, and now I'm kind of like, wow, an autistic kid around, he's, yeah, even if I lock it up and everything, I know that I'm stupid and will like forget to lock it or something, and I just can't trust him. So it's probably better to not do that. Or if I'm gonna do that, store it at my parents' house. Don't keep it in my house, you know. So I'm like just not as interested spending on that now. It would be like a good example. And it's the same with the car. Like it would have liked a nice sports car, and like this would be a great opportunity to like to get a car like that, right? Because it's just for me. I'm driving myself, you know. But I think that I'm gonna get like a Mazda that has the best gas mileage and 4-wheel drive is what I think I'm gonna do. So who will you be working for? Well, so not that I don't trust you guys, but I am still going to be tight-lipped about the exact company names that I'm working for. But it is basically a tech company here in Utah. They're actually a little bit more involved in like AI stuff. So there's a couple of things about it that are really good. Is it OnlyFans? Yeah, let's just for entertainment's sake, just assume that the new company that I'm working for is OnlyFans. That's right. Yes. Dude, I saw this thing the other day where they were like, you know, how much money per employee do each of these companies make? And like the amount of money per employee that OnlyFans was making was like millions of dollars. And it made me so mad because I was like, okay, but you're not counting all of the contractors, the people that are actually making the money on OnlyFans. Right? What would the average, if you took up all of the people on the platform in the past year that have been active on the platform, and how much money per person then, it would probably be one of the lowest. So it triggered my, I don't know what you want to call it, triggered my autism or something like that. You might feel like a nerd getting a van, but if you get some of the right vans, they're very like, oh, no, I have a van that's very nice, yes. Yeah. No, I'm going to get like, well, the question is, do the Mazda 3 hatchback for 4-wheel or all-wheel drive? Yeah. And hybrid, do they make it hybrid? So it'll be either the all-wheel drive Mazda 3 or the Mazda CX-50, I think is it. Or is it 30? Mazda CX-30? Mazda CX-30 hybrid all-wheel drive. Yeah. Probably what I get. Now you can get those very luxurious inside, but nobody will know. Which I'm totally cool. I like the stealth wealth idea. But the key thing for us, is that it's an hour drive away because all of the tech companies are in Provo Valley, Utah, or they call it Utah Valley, but basically it's the valley south of Salt Lake, and it's about 45-minute drive for me, so that's a lot of time out. We'll probably go back to like we would be ending the stream right now. In fact, on Monday, because they want me there at 9 on Monday, probably we watch the S&P 500 open and then we end the stream there. Just to make sure that I've got extra time on the first day to get there, right? Because I've heard that the traffic at Point of the Mountain gets really bad. So that has pretty significant ramifications for us. Probably means that I can't get super deep, like, because really my best trading was like that post COVID period where I was able to trade until 11:30 Eastern time every day, right? Not that the bonds are giving us really great opportunities these days anyway. But volatility is just so low. So I might shift. I do think I'm still going to keep as my primary focus building our own trading platform. We'll see what it means for videos. Probably how many videos I make just depends on how bothered I am by certain issues to make a video about it and how much YouTube rewards us for it. So if you want me to make more videos, make sure that you give every video a like and everything. Watch the whole video. Share the link around. Yada, yada, yada. And go submit the video to the Reddit or something. Wow. So we kind of rose back up and came back down here to 27. So I do think scratching was the right move. I do think that I could maybe scalp a tick or two out here. But the S&P, let's just see. I don't think that I'm going to take another trade, but there's still this chance that the S&P takes a further puke, right? Like they're holding 68.50 at the moment, so I think I called that spot pretty good. Well, let's see if they have a bigger push. Okay, so when 26.5 broke there was a lot of market orders hit back into the 26.5. So I'm wondering if maybe there are some robots fading the range there, but that break kind of scary. Well, there you go. 26 went too. The overall cumulative delta is still flat, but I am seeing like market orders hitting into the bids here at every step down, which is kind of curious. Kind of suggests to me people fading the range. And what I'm seeing right now kind of looks more to me like market maker endogenous moves. Which kind of makes me like anytime that people are fading the range like that, that's like where it's going to go a little bit further and screw them over, right? When I think there's a trend coming, then I just want it to continue. But if it's not coming, then I look at the chart and I say, okay, what would most of us want to do and what will screw us over the most? And then think 2 or 3 steps past that about what would screw you over the most, and then you won't want to take a trade. Well, let's just note that there was a volume cluster earlier at 25.5. I think that the liquidity should be recovered from there. But psychologically, people are probably going to be thinking about that. Hey, Big Toasty, where you been? He says, hey, and I'm like, oh, wait, he hasn't been here all day? But no, but yeah, he has not. You're late. Oh, you're at work. I Starting a new job is super exciting. There's going to meet so many new people. Like, your life is going to change so much. There's a lot of really good things about it. But I'm sure that, like, you know, I'll be super hardcore for like a month, and then I'll be bored of it already. I'll be like, I wish I was sitting at home trading. Yeah. I think the thing that makes me the most anxious is realizing that I'm going to have to start being hardcore with my time again. I'm going to have to be, you know, I get home, do the workout, eat, maybe go to sleep immediately afterwards. How are you doing? No, we're doing okay. It's been a really low volatility week. Today was better than yesterday in some respects, but FBI arrests Virginia man in January 6th pipe bomb case. And the Widowmaker awakens, JGB panic, yen surge, and global deleveraging trap. Well, so when I was reading this stuff, definitely when I was looking at like my morning overnight news synopsises and everything, but we didn't really see too significant of overnight moves. And the S&P 500 has been down, but okay. I definitely see the chances of, if the yen recovers too much, it really hurting global liquidity. That carry trade unwinds further. But so far, the markets don't seem that panicked by it. Maybe they should be. I kind of feel like maybe they should be. Meta shares jump after Zuckerberg prepares deep cuts to metaverse following epic flop. Well, yeah, how is anybody going to go into the metaverse if they can't buy RAM? Seriously, guys. Sam Altman quietly tried to build a rocket startup to compete with Musk's SpaceX. So, do you think that, like, Sam Altman's own insecurities and desire for social praise and things like that affects his decisions more than we realize? Because I would normally think, like, that would be stupid to be making decisions based off of things like that. But from what I've come to learn about high performers, like, they very much do that. That people that have a chip on their shoulder for whatever reason are way more likely to do that sort of stuff. Like, I would maybe be more successful if I had more of a chip on my shoulder. Like, if I took the things that have happened to me and was really resentful to society about that and everything, and really felt like I was trying to prove myself or something. Because I think that's like one of the things that is different from me as compared to most other YouTube personalities and especially trading personalities, is that I don't really do that to the same level that other people do. Even though I would maybe have plenty of reason to feel that way. This is like, was I talking about this yesterday? The Incredibles? Like the whole motivation for Syndrome, the bad guy in the first Incredibles, is like really dumb, right? But some people just get the biggest chip on their shoulder resentment from that sort of a thing, and it makes them more successful. And like organizations like the FBI kind of look for people like this too, which is kind of interesting, right? And I'm starting to realize, I mean, before this story, that like it seems like that's kind of going with Sam Altman, which is also why he hates why Elon Musk hates him so much, and they hate each other, really, right? Sam Altman wanted to prove himself by starting a startup, and that resulted in him being in charge of a non-profit company that he then turned into a for-profit company. I'm not a big fan of Sam Altman, says Big Toasty. Oh. You know what's really funny is that I'll read a story about a rich guy, and I'd be like, oh yeah, no, this rich guy is awful. I can't believe that they're doing that. I need to remember that so that in the future I remember that I'm not supporting this person, right? And then I'll forget about it. And then, you ask me about them the next week, I'm kind of like, yeah, whatever. Sam Altman, like I'm pretty sure I recall there being some things revealed about what Sam Altman has done that really made me be like, we should not trust this person. Like, this is not the person that I want to be at the head of the AI revolution if AI is really going to take over everything. This is like the last person that I want to have. But I can't remember why. And when I think about it right now, I'm just like, oh, he's a guy. Whatever. I'm sure that we're going to, again, when the AIs take over and we're all living in a tent city out in front of OpenAI headquarters. And then at the beginning of every day, he's going to open up the front gate and he's going to select a few select people that they need to help do additional AI training and other jobs that the AIs can't do. Because, they lost X number of people the day before. And that's why we're all there. And it's Sam Altman will open up the gates every time and be like, you, and you. So for probably it wouldn't be Sam Altman, right? It probably would be an AI. And it can read all your faces, and some of you have already been blacklisted by the AI. And then if you're selected and you're an employee, then you get to live in the company-sponsored housing on the insides of the gate. Live the good life. But you'll feel bad because you know all of your friends and everything that you left behind on the outside that are still struggling. And what are you going to do? They should make a movie like this. They should make a movie about this. Well, it looks like oil has made a more significant recovery. It's interesting. There was, as far as I understand, there was not some headline specific to oil to cause it to drop down. And it was mostly just dropping on like risk sentiment. But initial claims plunged to their second lowest since 1969. Really? Huh. Morgan Stanley quietly offloading data center exposure via significant risk transfers. So this whole thing that like, are we in a bubble? How can we be in a bubble if everybody knows it and all of the companies are hedging against the break of the bubble and things like that? That makes me think that like it's not actually going to pop. Here's one from r/day trading. How do you stop yourself from trading on days when the market clearly isn't giving anything? Well, what you do is you look at, the range and you decide, okay, where is the edge of the range and where would I try and fade the range? And then you think about, okay, what if there was a false breakout out of that range? Do you still want to take a trade off of that? And then if you say no, then maybe you think, oh, actually, it's going to be a false breakout. So you want to let the do the false breakout and then bait it on it going back into the range, right? But then if you're going to do that, what's actually going to happen is it's going to turn into a trend down and you're going to get absolutely destroyed. Now, do you still want to take a trade? No. Then what you should do is just come over to YouTube and start typing some comment on Seth's YouTube live stream chat and distract yourself that way. Building a pretty good cluster of volume at 26, by the way. If he really wanted to compete with Elon, he should quietly build robots. They need to get into robotics. That's what it is. You're right, GDH. There needs to be the OpenAI automaton. I saw this thing the other day. This guy was saying, like, I think that it was a venture capitalist guy, and he was saying that humanoid robots was in a bubble and yada yada yada, because pretty much like the human form is like the worst form for any specific task. I felt like he was completely not getting it. There's two reasons. One is then you have a robot that can do everything that a human can do, because if you make it something that like it can only go on flat floors, and then what are you going to do when there's stairs? You're going to make something that's specific to go upstairs, and then is it going to be good at doing this, or it's going to be good at doing that? Like maybe you can make one of those dog things that's good at going upstairs, but then is that going to be good at washing the dishes? And then on top of that, people are just going to feel more comfortable with something that is humanoid. I think that they would feel more comfortable with something that looks humanoid at least. Humanoid, but like short and female, probably. That people will find that less threatening. The robot would come out to select the day. Yes. The day laborers. Exactly. I haven't seen. I wonder if GDH has caught up, or if he's still 5 minutes back. We'll see. But I haven't really seen a movie that I think really truly capitalizes on people's angst about artificial intelligence replacing everybody, you know? The techno-feudalist future. Oh, by the way, while I'm thinking about it, I was telling you guys I did an interview with somebody. They interviewed me this time. And I never gave you guys the link for it. So there's the link in chat for that interview. You can tell me how well I did. I don't think that for most of you that there'd be anything like too surprising in there for that. But for him, he was like really surprised. He was like, "Oh, well, wait, what? You don't? No patterns? No, you know?" So it was interesting to see his reaction. Of course, this YouTube, I don't know if that video would get that popular. So that's why I need you guys to watch it and tell me how you think it did. That's really crunchy. What is that at 250? And you see that order below us? It's moving back and forth. All right, we heard you. Come on, jeez. Is that somebody being like, hey, like you really need to come back and film me? I don't know. He's being so insistent that I hope the market makers just slam it up 4 ticks. Just to make sure that if it is somebody looking to get filled, that they don't get filled. Make him chase. That really does feel to me like somebody being impatient. Like it's a tight market. If you needed to be filled, you probably would be pretty frustrated right now, wouldn't you? Except for that we were down there like a few minutes ago. So like you missed your chance, buddy. We train AI with your video content and have virtual stuff. Seth, do your stream while you're... I really should. You know what? I actually totally looked into doing that. And what... maybe we got a full-time job going here. Maybe we can do it. At the time, the issue was I pulled all of the stuff and the AI wouldn't let me do it. Like, it was too much data, essentially. I need to look at it again because I was just trying to pass it into ChatGPT, you know? And it was basically like the files that I wanted to give it were too big. But maybe there's some other platforms that are more about training your own LLM and baking your own model. Maybe that would work better for that sort of a thing. But then it was totally like, I bet you I could even get something that like copies my voice and everything. But I think actually, if we did that it wouldn't be me. I wouldn't have the AI try to masquerade as me. I would make the AI that would say all of the same things as me, but has a completely different personality. I would make it a female that's like super sensitive and caring to everything that you guys say, and really supportive even if you're talking about patterns. So something that like they're going to gently try and direct you the other way instead of being like me, like that's not gonna work, just give up now. You know. Like a completely different persona that ends up being more popular than myself, essentially. It would love technical analysis. Well, I would still want to train it so that it tries to push people towards what the evidence suggests is going to be the most effective for them. So it would pretend to love technical analysis, but then when people share its technical analysis with it, it gently guides them, you know? I don't know how you would do that, but I bet you ChatGPT could figure it out. I bet you ChatGPT would be awesome at that. Just kind of like redirect. So I was just, I don't know why I pulled up LinkedIn, but I pulled up LinkedIn and I had a friend that I kind of suspected was looking for a new role. Just because I never saw him active on LinkedIn, and all of a sudden I started to see him active on LinkedIn, which kind of made me think that maybe he got laid off and was looking for a new role. And then, sure enough, today, he shared that they're starting a new position. But this position is not in Utah, so I'm wondering if he's moving. Here's another guy. Looks like he's looking for a new role, which is unfortunate because he was unemployed a year ago, so he's having it rough. Have you seen this thing where this guy is like, I've been giving these large language models money so that they can trade and seeing how they trade? And like when he first posted it, they were all doing really well and people were like, this is going to turn out badly. And like a week has gone by and now they're all underwater. I'm gonna look at this again. Interesting. You know what's funny is that when this new role, after I accepted it, I started getting tons of messages on LinkedIn again. Even though I haven't changed anything on LinkedIn. Oh, actually, this one was somebody responding to something from a long time ago. Well, okay, whatever. I think there are some companies out there that, like, they're dipping their toes into the water on hiring right now. And I really think that when companies start hiring again, that it's going to be like mad dash for all the talent again. And most of these companies that have been really awful at hiring will just miss out on all of the people that they wanted and be really frustrated. And it'll serve them right. I guess the only reason maybe I actually believe that is just because I've had some recruitment experiences that were just awful and I want revenge. But in the end, the place that hired me, they were good, so I don't know. You watch. It'll be like layoffs at the beginning of the year, but then a lot more companies will start hiring. And I think that long-term unemployment rate will come back down. It's either that or the economy slips immediately into a recession. So buckle up. It's going to be a wild ride. Rare earth resources on the verge of launching full operations. I'm so excited, guys. The U.S. can't afford falling asset prices. Stocks are the retirement system in the tax base. If markets drop, the system breaks. So, you know, there's this issue where if you've got more people drawing their retirements out of the stock market than new money that's being put in, you have a big problem. Now, a lot of people think about that in regards to the boomers, but it actually turns out that it is not such a big deal because there are more millennials than there are boomers now. So we're still in, there are more people paying in than are pulling money out. And the boomers have mostly moved their stuff already to fixed income. Like they shouldn't have a whole lot left in the market now at this point. According to like especially target date funds and things like that. There's not so much in stocks. So it turns out not such a big problem with the boomers. But when I retire, I think it could be a big deal because there's not very much behind us. So I will retire and I will be getting everything out. And then probably as soon as I do that, that's when the market starts to struggle because then the really big boom of millennials that comes after me will start retiring and pulling their money out of the market, and then that could be a rough thing. But the thing is, before that happens, you're going to have Social Security and Medicare come to a head, and probably another bout of inflation. So there are bigger problems to worry about than that. That might end up making that irrelevant in the long run. Because it'll work out if there's enough inflation, essentially. which really sucks for anybody that goes on fixed income. Well, we got about 15 minutes left. The S&P 500 has clawed back a lot of those losses. And oil has completely recovered, which is interesting. Three in 10 companies will lay off employees during the holidays, according to resume.org. 7 in 10 will use AI to plan or execute layoffs. 8 in 10 will still reward executives with bonus. I don't know how real those are. I don't know why this just reminded me of this, but I saw this thing yesterday. If you take the like the number of people in Gen Z, and then you take during the period that they were born, the number of abortions during that time, it's basically like 40% of Gen Z were aborted. Can you believe that? That is crazy. The demographic consequences of that we're probably only now beginning to understand. You know, something that happens is the period between Thanksgiving and Christmas does tend to be a little bit quieter unless there's news. And we got a decent amount of news this week, but it kind of looks like that we're getting like a particularly strong low volatility market here. I think it's going to be like this. I think there's going to be a lot more like this. So even the internet in general, like just as I'm browsing through Reddit here, seems quieter than normal. Colombian president announces that if there will be tariffs on Colombian goods, he will add 50% tariffs on U.S. goods and says he will not give in to retaliation. We don't already have tariffs on them? Man, people are really bashing on the Sony A7 IV just because they feel like that the Nikon and Canon counterparts are better at the moment. Oh my, how have things changed, because the A7 IV is still an amazing camera. By the way, those of you that are still, because you've been here, you had pretty consistent viewers all through the day here. Make sure you hit that like button. We got 8. We got 8 today, so that's so great. But if you haven't already, make sure you hit that like button before we go. We'll stay for another 5 minutes. I'm interested. Oil here is like pushing highs now. Right there at 59. That's kind of interesting, huh? Oh man, that's right. They're gonna be fixing Unreal Tournament 2004 so that it works on modern machines. I am so pumped. I may just have to abandon everything else that's going on and just focus on playing Unreal Tournament. Wow, leaked call shows European leaders conspiring against Trump peace plan. My, oh my. Macron tells Zelensky the White House is set to betray him. Wow. What? This sounds crazy. In a development that is not entirely surprising, well, I would say not surprising, but like maybe the degree or that we found out is surprising. European leaders are claiming that Washington is looking to betray Ukraine and President Zelensky during potential formal peace negotiations with Russia. There is a possibility that the United States will abandon Ukraine on territorial questions without providing clarity on security guarantees, French President Emmanuel Macron reportedly said according to a leaked phone call record with other European leaders. Likely, this was an intentional leak and a bit of a strong signaling to the Trump administration, as Europe has not been on board with the U.S. president's proposed peace plan from the start. There is a possibility that the U.S. will betray Ukraine on the issue of territory without clarity on security guarantees, Macron continued. He laid his view that there was a great danger for Zelensky. However, Macron's office has subsequently sought to clarify that the president did not use those words. The leaked transcript of the call between European leaders strategizing about how to protect Zelensky government and Kiev's interest was published Thursday by German magazine Der Spiegel. Thought it was Der Spiegel. Oh well. Also reportedly on the line in the conversation were German Chancellor Friedrich Merz, NATO Secretary General Mark Rutte, Finnish President Alexander Stubb, and of course Zelensky as well. Merz had in the dialogue agreed that Zelensky should be extremely careful in the coming days and warned the Ukrainian leader that they are playing games with you and us. President Stubb followed with, "We must not leave Ukraine and Vladimir alone with these people," after NATO Secretary General Rutte chimed in, "I agree with Alexander. We must protect Vladimir." The underlying assumption seems to be that Zelensky is in a weak position and is being bullied by the more powerful U.S. officials who have leverage. Well, I mean, but that is true. Not that they don't have Ukraine's best interests at heart, but that they really want to strong-arm Ukraine into accepting a deal because they think that's the best thing for them. They think that the war is pointless. And at this point, I kind of agree. I don't think that there's much of a benefit for Ukraine keeping the war going. They need to end it. The question is just, how do you get an acceptable peace deal? Because they do need strong security guarantees. And it would be very much a bad thing to like try and push for the deal without getting those security guarantees. Context, part of this conversation is particularly interesting, given it seems to focus on Trump envoys Steve Witkoff and Jared Kushner, who were just in Moscow meeting with Putin and are spearheading efforts to get the Trump 28 peace plan, or 19 points based on reports of a revised version, past the goal line. Politico presents this section of the transcript as follows. Finland's Stubb seemed to agree with Merz. According to the transcript, "We cannot leave Ukraine and Vladimir alone with these guys," he said, apparently referring to Witkoff and Kushner, which attracted agreement from Rutte. "I agree with Alexander. We must protect Vladimir," NATO chief said. NATO declined to comment when reached by Politico. Der Spiegel admits in its report that these and other statements produced in the notes of the conversation illustrate the Europeans' deep distrust of the two Trump confidants. Michael West, who was one of the report's co-authors, framed all of this as focused on countering American dirty tricks to end the war. One aspect of the conversation was The leaders found agreement on the issue of frozen Russian assets kept in EU banks, which they consider a purely European prerogative, amid recent reports that the U.S. is ready to return those to Moscow as part of a finalized Ukraine peace deal. Zelensky office, meanwhile, neither confirmed nor denied the accuracy of the leaked transcript. An unnamed Ukrainian diplomat did respond as follows when probed by Politico. In general, only the Russians benefit from any splits between Europe and America, so our consistent position is that transatlantic unity must be maintained. Yes, and Zero Hedge does often seem to, like, be a mouthpiece for Russia sometimes. They post what Russia wants, as I can say that. But the reality is that Zelensky has constantly pushed back against the idea of forging a peace without direct Ukrainian oversight and input. He has also consistently refused territorial concession, and his European backers have also balked at this key part of the Trump plan. Kremlin is currently insisting that its control over the Donbass and Crimea not just be deemed de facto, but it wants full international and Ukrainian legal recognition that these territories are under the Russian Federation. Oh, yeah. Well, and I really don't see how you get Russia to agree to a deal unless you give them those, because they basically already own them. Well, anyways. While we were reading that, the Treasuries dipped another 2 ticks, so that puts us now at 25. I think ultimately on our trade earlier today, that it fizzled out. Like it didn't happen. We were wrong. It came back a little bit too, though, so that's interesting. I want to start thinking about next week, but yeah, we'll worry about that tomorrow. Now it's time to get going. Thank you guys for sticking around. Make sure you hit that like button before you leave. See you tomorrow. In the meantime, stay